Hey everybody, welcome back to the channel. Today I want to go over the PM Silver Bullet on Wednesday, August 16th. That is FOMC day, so FOMC comes out here right at 4 o'clock. Let's move that to 4 o'clock right there. And so let's see how this plays out. Normally we want to wait about 15 minutes to see how FOMC, what happens with price action. Let's see what happens here. We're 11 minutes in. Let's just, sell side's been taken right there. Let's just see what we see here. Yeah, we're 14 minutes and we have a fair value gap right here. Would I have taken that trade? No, not yet. No. There's nothing, there's no market structure shift or anything. That's just it just worked out that way with the fair value gap. I wouldn't have taken it. And I need to see a market structure shift. This could just be a pullback. So for me, I wouldn't have taken that trade yet. Okay, that broke market structure right there. You can use that one. So let's see here what happens here. Right, so there's a huge fair value gap right here. So if price comes back into this, ideally you'd want to come into the middle right here. So where would you be aiming for if you were going long, right? So you'd have sell side liquidity taken, this is taken out. You'd ideally want to come into the low here. So where would you be targeting? Well, your first objective would be this right here, these highs. If you look back over here, there's a fair value gap over here as well. Up here, other highs. So you have several options of what you could be aiming for. So let's see if price comes in here. If we took our 5 handles, 10 handles would put us here. Does it line up with anything? Lines up with this fair value gap. So right there. Alright, so if price does come back in here, we will take this trade and we will buy 2 and see what happens here. Okay, well I'm buying 2 here, but I would have gotten entered right there. So we'll buy 2 there, even though this is really our trade. And we'll take partials above this right here. Okay, so let's see how this trades out here. Okay, so we'll take one off here. Stop is now break even, so let's mark that on our chart here. Our trailing stop is right here. Like I said, we're aiming for that fair value gap to fill in that inefficiency. Now, could you have entered again another one right here? I wouldn't, because I don't have a clear high objective, right? I'm looking to fill in an inefficiency because it makes it 1 to 2, right? I'm not aiming for any more highs. I already cleared this high, so we've already taken up some buy side liquidity been taken, right? So just trying to get my 2R of my trade, so we're lowering our risk. I would not have taken another trade that goes in here. It's just not what I would do. Even though that comes then to basically consequent encroachment, still wouldn't be taking a trade to go long. Okay. It's better. All right, that would have taken us out, so I have to enter, close the trade out right here. Not ideal situation with TradingView, but this would have been a 10 handle move. Instead, we got a bad fill and a bad close. So Either way, that's good right there. Let's see how the rest of the hour plays out. So it does fill in this fair value gap to the tick. I mean, so you see it. Price, as ICT says, price does one of two things. It takes out old lows or highs or goes in to fill in an inefficiency. So here we take out an old low, took out these lows, so took out an old low, and came back in to fill out an inefficiency. Now it's kind of looks like it's retracing or coming back down. So we'll see where it goes from here. This would be external liquidity taken. This would be internal liquidity taken. Okay, so you have liquidity there. Let's just mark this up, see what happens here. You have another one right here, which should be a market structure shift to the downside. Right? So the liquidity up here has been taken, right here has been taken. You can say here has been taken. You have liquidity, by its side liquidity is taken. Well, this would be the market structure shift. Now it's been taken. We have a fair value gap right here. Let's mark that out here. Fair value gap. Okay, so let's see how this plays out. You also have a fair value gap right here. Very small one. Very small one right here. Let's mark that right there. Okay, and you also have a volume imbalance right here. Okay, so obviously it goes in here. I'd want to take a short on the longer one, and I'd aim for down here for this low to be taken out. These new week opening gaps. It's kind of where I'd be aiming for. So let's see if price comes up and takes us in or not. Okay, I need the top one. Okay, I'm going to sell 2 there. Okay, I'm going to mark my short here. See, this would be above this candle. And let's just aim for the right here. That's 3. Right there. Okay, go to new week opening gap as a target. Where would I take my partial? About 60%, so somewhere in the middle of this fair value gap here, because we know that's going to be a kind of a speed bump, or should be act like a speed bump right in there. So somewhere in there, I'll be taking my partial and lowering my trailing stop. Actually, let me move my trailing stop so it's not confusing here. Okay, so now let's buy one there, and I'm moving my stop to break even, and plus 1 tick, so right, 1 or 2 ticks, so right there. Now this becomes an inversion fair value gap right here, and you see a fair value gap right here. So I'll change this to an inversion fair value gap, and then I'm going to mark off this fair value gap right here, because this is a fair value gap here. Okay, so for me, my stop would go probably to the top of this inversion fair value gap. I don't want to see that getting traded into, so that's where I'd move it. Okay, I'm going to close my trade there because we would have taken us out right there, and that would be our trade right there. Let's see how much more it goes. Here's a fair value gap right here. Just show you what it's doing. And if you didn't want to target this new week opening gap, you could have targeted down here if you wanted to. Leave a runner going to see how it reacts. Just kind of ranging right there. Okay. There's another fair value gap right here. It's outside the range, so I just wanted to show you kind of what we're looking at here. Just put this on here just to have this on. Okay. Let's look at this with these off here and show you what's going on. Here's your 2 silver bullet trade setups after FOMC. So what happened here is we had FOMC at 2 o'clock. Price came down. We gave it 15 minutes to see what price was doing. It took out a sell side liquidity pool, and then it gave us a market structure shift. So we're looking for the 2022 mentorship model at this point. We do get an entry right here, but we didn't have. It was before the market structure shift, so we waited. We came in and we knew that there was a fair value gap here. We ideally wanted to come into the consequent encroachment range, but it didn't. We entered right here at the top. Our stop was down here, and we took our 1 to 2 risk to reward ratio, and we took our partials above this high, and then we came back up and it filled in this inefficiency. Okay, so we had external liquidity being taken, and then it goes into internal liquidity being taken. Then we saw that internal liquidity was taken, also buy side liquidity pools here taken. Then a market structure shift. So then we looked back, we saw a fair value gap, another fair value gap. So we took our trade at the second fair value gap and came down, creating an inversion fair value gap with another fair value gap that was left open. And price came down to the new week opening gap. We exited our trade. We did kind of see price kind of get stuck in this range, kind of like a speed bump, kind of like how they are usually, a speed bump. But you could have also taken this trade down further, kept a runner. Obviously, it went down quite a bit more. Even goes more beyond that. But those are your 2 trade setups for August 16th on Wednesday after FOMC.